What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 4th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to dive into the U.S. elections and talk about how they're impacting not only Bitcoin and cryptocurrencies as a whole, but also diving into equity markets and really talking about what we should take away from this. What are the two disastrous scenarios that would knock markets abroad for a tailwind, really bringing downside across the board or potential upside? We're going to be talking about all these and more as we go throughout the video, as well as doing a sponsored interview with my good friend Alex Wang over at Ember Fund, which allows you to invest in crypto like a hedge fund. So stay tuned. You won't want to miss that and all the more that we talk about today. So anyways, guys, I know it's been a long night for everyone. Many of you have already probably been tracking the election. It's been very tight here overall, as it tends to be in the United States. I know many of you are from the U.S. Some of you are outside the U.S. watching it. And I want to go ahead and provide some clarity just to talk about the current scenario and to try and be as non-biased as possible, as I always try to be. And along with that as well, just kind of talk about what the markets are signaling to us right now in regards to pricing and who's winning, who's not, and then also what the market would really not want to see. So let's go ahead and talk about it. Right now, here we can see within the electoral college system, which is what we use to vote in the United States, that it's relatively close here. There's some states here that Trump right now is favoring in, from Georgia to North Carolina to Pennsylvania to Michigan, but we still have some voting reporting to come in. So again, some of the pollsters are not voting in these states for Trump yet. But if you start to take some of these that are more favorable, for example, like Georgia, that have 94% reporting in, or North Carolina in this case, which Trump has started to get in around 94% reporting in this case, you start to get a relatively even electoral map. And then it really comes down, as it usually does in the United States, between Pennsylvania, Michigan, and some of the Rust Belt states up north. Now, taking this into account here, we have a very kind of, tight election here. If anyone's doubting that, they're not really getting the full picture. It is relatively tight here in regards to the popular vote or the electoral vote, plain and simple. But I wanted to go ahead and talk about how this is impacting markets. I would assume everyone is kind of panicking right now that for example, this looks more like it's going in a Biden direction, or it's going more in a Trump direction. And last night we probably saw Bitcoin reacting some certain way to either side. Not really. Bitcoin's price has basically been exactly where it really started throughout most of the night. You can just take a look here at the daily chart, guys. Yesterday, on the 3rd of the election day, we opened up here. Now we're up a couple $100, right? Now a lot of people say, oh, well, that means that so-and-so had a more positive effect. Guys, this is the same kind of price action we've been seeing for the last few days and weeks. And this plays into our topic or kind of theory that we've proposed, that Bitcoin isn't really going to be affected either way. No candidate really offers that much of a dramatic benefit or negative for cryptocurrencies as an asset class. Right? We haven't seen regulators or per se, the U.S. government, more for that matter, try to regulate crypto to the degree over cryptocurrencies like peer-to-peer digital currencies like Bitcoin that are mined, that aren't ICOs, things of the sort. So again, it doesn't look like there's really that much of a difference. Along with that as well, we take a look at the broader crypto market. Most cryptocurrencies are in a no-trend scenario between 1% to 2%, and we've got a few altcoins here starting to enter into red territory. Nothing severe. Now, the biggest thing that we've seen, as we talked about before, not only here on the channel, but also in the Dash report, was watching the equity markets. Equity markets right now popping up around 2.8% on the futures. Again, we saw most of the rally last night. It was really exacerbated last night, and now it looks like we've been holding up a majority of those gains. So really, what is this pricing in here? Well, we did see this dynamic shift in equity markets last night when Trump was starting to win very clearly Florida and a lot of the major swing states that, again, the pollsters were showcasing he wasn't going to win. This isn't just me saying that, guys. That's basically the market moving, and we saw this across the board. We saw this, for example, if I jump over here, we saw this in the Chinese yuan in this case, where it spiked up. In this case, or basically the dollar spiked up against the Chinese yuan, basically leading towards a weaker Chinese currency. But now that's started to reverse here in Forex markets. So what are we seeing here? Well, we're seeing the NASDAQ here, which is holding up most of its gains here, right, on an increase here over Trump getting a lead. And then also we're seeing the Chinese yuan go down. And if we're taking a look at the betting markets went up 70% for Trump last night to 70 to 80%, depending on where you're looking at, and then down to 30, 40% now. No one really knows what's going to happen here. That's how tight it is, guys. So what can we take away from that in this case, right? Putting aside our biases of what we want to happen in the election, what's the worst thing that can happen here? Well, one of those is having a contested election. And along with that as well is having, in this case, gridlock. We've basically got a confirmation of probably both of those. And I got to say, the rally we're seeing in equities and the broader market, I have to say that there's a chance that that could come to a screeching halt very, very soon. So let's go ahead and talk about why these two things are bad. There's actually a great Bloomberg article that actually came out this morning. Someone was up early. In this case, Jonah was up early, and Ruth as well. So in this case, they wrote an article with kind of two headline points that I want to focus on. And we'll scroll down and read a little bit through it here. But two bad election scenarios come back to haunt global markets. A divided government makes big stimulus look less likely. So in this case, what we saw last night is not just the presidential election, but it's also congressional elections for the House and the Senate, which are the two other portions of the portions of the body that make up the legislative body in the United States that lead basically legislation from getting from point A to point B, from the legislative body into the president's hands to sign. When there's gridlock, in this case, where Democrats have taken and maintained control of the House, in this case, which writes legislation, and the Senate in this case, which is going to be kind of the kind of baton in this case that's passed on to go on to the president, right, to get legislation through, the Senate probably going to be controlled by Republicans again. It really doesn't matter if Joe Biden or Trump wins here. There is no specific, benefit in this case for Republicans or Democrats, really, if you want to talk about it on an actual action basis, because outside of having your guy up there, it's not going to be any benefit to actually getting legislation through for the most part, at least for the 95% of what each party wants, because there's basically a two-step process. Democrats could pass something, Republicans will reject it. If Republicans maintain the House, they'd probably get rejected if the Democrats took the Senate. And the same goes here, where even if you got Republicans or Democrats owning both the House and the Senate, if there's a president that's on the opposite party, they'll just basically veto, in this case, any laws that get passed, or they do basically, I forget what the actual term is, but it's almost like a passive veto, where they'll just basically leave it on their desk. They don't even have to officially veto it. They don't have to sign it, right? And this is a part of almost a bit of a healthy democracy, but at the same time shows us the kind of gridlock in Washington that prevents not only radical things from getting through, but also at the same time can also lead to things not getting done. And markets usually favor this. They usually like this because it brings consistency. But the problem is right now is that we need stimulus in the United States, apparently, to most people's opinions, right? The markets are saying that. So the markets want to see stimulus, and we have not been able to see that as we've been living through gridlock for a long period of time. And it was proposed that after the election, if Republicans took back over, Trump has said this, for example, that if Republicans got the House and the Senate, control of Congress, they would get legislation through it, and vice versa for Democrats. They would do the exact same thing. And in this case, this is one of the big things that worry markets here. But along with that as well, a contested election could keep results unknown for weeks, and markets don't like this kind of uncertainty, not knowing, what kind of regulation or taxation or general kind of government kind of policies are going to be implemented over the next 4 years. Outside of that as well, just the uncertainty that brings with the kind of anger and frustration that comes from not knowing who's going to be president and who's going to be in certain positions of governance, right? So again, these two things should be really scaring markets. Right now, we're not seeing that here in regards to the NASDAQ, so maybe we're going to start seeing some more data here. But all in all, again, the major analysis here is that we need to watch out for these two things. If it turns out that in this case, we do confirm gridlock here, which we pretty much already have, and then we have the second element here of uncertainty in markets, this is going to be a disaster scenario for equities in the United States. So keep a watch on this, guys. We don't really know the data. Again, it is uncertain right now what's actually happening in regards to the election. We will see. Again, a lot of these swing states, the numbers are showing so far Trump. But again, we're going to wait and see the reporting here, see what happens. And overall, again, whatever happens here, hopefully it will be as democratic as possible. We hope more than anything that, again, this is a fair, decent election as it always has been. And I'm very excited to see what comes about it, no matter what way it happens in this case. It will be what people have decided to do with the traditional voting system we've used in the United States. Now, so we've bounced through some of these markets. The last thing I wanted to talk about here that was really interesting, and ironically, just like how in government, it tends to be that people do, basically the establishment tends to be more than anything, passes legislation during times where everyone's focused on something else, especially during the holidays, things of that sort. That's a very common trait. Just happens that on the Bitcoin network, someone has moved over $1 billion of Bitcoin during the elections, interestingly enough. So there was a recent transaction tied to the Silk Road here that did nearly $1 billion in volume here. This is the tweet from Whale Alert here, almost 70,000 Bitcoin and a total dollar value of $955 million being moved. And again, with links here towards the Silk Road. So we'll go ahead and read through some of these points. There was over again, in this case, a Bitcoin address that had transferred over 70,000 Bitcoin 11 hours ago from the writing of the article here. These funds likely originated from the Silk Road. Tom Robinson, co-founder of Elliptic, noted in his LinkedIn post, adding that the coins may have been moved by imprisoned Silk Road operator Ross Ulrich on a Silk Road vendor. This is the first transaction from the address since 2015 when it transferred 101 Bitcoin to BTCE, a now shuttered cryptocurrency exchange allegedly favored by money launderers per the post. So this is really interesting to see here, guys, whether it is Ross or someone else tied to the Silk Road. This could create some really interesting dynamics for Bitcoin here. It's a lot of Bitcoin on the open market. I'm interested to see what's going to be happening here. We'll be continuing to watch this. There's not any key conclusions that we can take away, but I thought I would bring this to everyone's attention and showcase that we will be watching this over the next few days and weeks as things develop. If it just spams out to different addresses, or they're trying to, for example, fractionalize it or dust it amongst different wallets, that just might be the case. Who knows? We will have to see over time. Anyways, I hope you all are having a fantastic day wherever you are. I'm curious to hear, what do you think about this? And what do you all think about the election here? Not really asking in this case to share your opinions on what candidates you think about. I want to talk more on a market perspective. What do you think is going to outcome out of this? And again, I think this is a great test for everyone here. Just ask yourselves, how can we get past our biases and try to understand what's going on? That's the major thing that I want to press here. But outside of that, guys, let's go ahead and dive into this wonderful interview with Alex from Ember Fund. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with a really close friend of mine in the cryptocurrency space, and that's Alex Wang over from Ember Fund, who is not only aiming to build a wallet that allows you to invest in crypto like a hedge fund, but is doing all kinds of crazy things that continue to impress me personally as another founder in the space, just to see how fast you guys have been moving into the space for DeFi, which we'll talk a little bit about today. Alex, thanks for taking the time, man. It's always a pleasure to have you on the channel.
Yeah, thanks for having me. Happy to be here.
Yeah, man, absolutely. It's been a while since we got to kind of catch up on the Data Dash channel. We talked a little bit in private recently, as I just wanted to catch up on how you guys were doing on your side. Ember Fund has been moving extremely fast. I know you guys kind of originally got your grounding, obviously with the slogan of investing like a hedge fund, to provide the ability for people to invest in indexed funds. So maybe you want to spend a little bit of time to talk about that, Alex, and then we can dive into some of the new features.
Yep, absolutely. So I guess I can start with kind of who we are and what we do. So we've effectively built a mobile app that allows anyone from around the world to invest in kind of this rich ecosystem of financial products, all of which are crypto native. So as you mentioned, we had indexes before, but we've kind of expanded on that a lot. So users can kind of invest in these portfolios that are constructed and kind of rebalanced by some of the biggest thought leaders in the industry. Whether it's hedge funds or quants or financial engineers, kind of partnering with a lot of these people. What's important is we actually kind of include the asset management and the education around that. It's not just, okay, here's a wallet or a portfolio and invest in it. In addition to that, we're also fully non-custodial. So we don't store any private keys or any sensitive information. So as you can imagine, doing that, rebalancing and doing all that stuff in a non-custodial way is a big technical challenge that we've kind of overcome through smart contracts and all that good stuff. And kind of in a nutshell, we've wrapped all of that, the portfolios, education, everything into a really easy to use product and user experience.
Yeah, I mean, honestly, you guys have done that really from the get-go. I've loved what you guys have built from the beginning, and it's nice to see that you've constantly found ways to make it smoother, but also at the same time as you guys add new functionality, still maintain the non-custodial aspect, which, as you know, man, from my side as well, I'm a big fan of personally. I think, again, pushing that boundary is saying that we can still have it where you can be your own bank, and along with that as well have all the features that you would expect from a really innovative crypto platform. I think it's the kind of exact kind of platform we need to kind of replace exchanges. So hats off to you guys for kind of still staying tuned on that message. I'm glad to hear about that. And speaking about some of those new features, Alex, I mean, obviously you guys have offered this ability to do kind of index fund portfolios. That are weighted in different crypto assets. I'm curious to hear a little bit about your programmatic yield product that you guys have recently launched, which is tapping into a little bit of the DeFi space, which I know many people here on the channel like myself are interested in. So if you want to spend a little bit of time, what is that about and what does it offer to users at the end of the day?
Sure. So the ethos of our company has always been kind of to be a frictionless gateway to kind of DeFi and all these, as I mentioned, kind of financial products that are crypto native. So when this yield farming thing kind of exploded, it was really completely in line with what we do. Simplifying and abstracting the complexities around all these financial products and kind of distilling it into a user-friendly mobile app. And again, providing kind of the education around what the heck are you actually investing in and why, right? And so that's kind of what we've done with the yield farming product, which is make it one click and you can deposit Bitcoin and then you automatically get access to yield farming strategies, which are, I know it sounds ridiculous, but generating roughly 40% APY on your money right now, right? So the way we do that right now, without getting into the details, is we're leveraging kind of Yearn and Curve and those protocols to do a blend of all the different yield farming strategies, right? So currently we're linked up with the DAI vault, which at present day you put in your Bitcoin, it converts into DAI. The DAI gets put into a Curve liquidity pool. You get the exchange fees. You also get Curve reward tokens, which were converted back into DAI, and that whole jazz. If any of your subscribers are interested, we're happy to go into the kind of technicals of that because it's pretty. It gets pretty crazy.
I was just going to build on that, Alex. That's the thing about yield farming is it's basically taking any route from point A to point B with, as little or as many steps as possible and stuff to get a high yield. That's really kind of the goal there, to put your capital to maximum capacity. And again, as you mentioned in this case, you guys are transparent about that process and stuff, but sometimes yield farming can be like borrowing certain capital through MakerDAO, basically creating a CDP or collateralized debt position, creating DAI, and then being able to interject it into different DeFi protocols where you get some crazy yield on their tokens, selling it, etc.
Exactly.
And as you mentioned, Curve and a few of those have been kind of the leaders on that.
Yep. So with yield farming, yeah, as you mentioned, there's to kind of simplify this, a couple forms, right? There's like getting reward tokens. There's leverage from there's leveraging your money and actually lending it. There's actually getting the exchange fees from the liquidity pool. Which the way I abstract it is kind of like owning a piece of a decentralized exchange, right? And getting a pro rata share of their earnings, right? And so when you combine that all, you kind of, we've kind of melded that all together and then we named it the programmatic yield because we kind of apply our intelligence into figuring out where the safe yield is, starting off with the DAI Yearn vault.
Yeah, man, I think that's a great first choice and stuff. And I like how you guys are thinking about safety because I think sometimes yield farming can be a bit kind of head on just chasing high number yields. But if you can get something, I think, around that range, it probably means, again, you guys are going down much more of a safer route than some of the other crazier yield farming protocols that may seem more lucrative, but sometimes aren't as secure. One thing I wanted to ask you about as well, Alex, I know this isn't the most recent feature that you guys launched. It was earlier this year that you launched it, but it was the Quant Fun features. So if you want to just maybe briefly talk about that as well, I'm curious. And I think, again, this kind of showcases you guys provide a full suite of different services on the platform.
Yep. So the Quant product is something we launched in Q1 of this year. It's getting a lot of traction. Effectively, it's a Bitcoin and stablecoin portfolio. And so we've partnered with a hedge fund that's a leader in the space called Blockforce Capital. And we've constructed this product that trades between Bitcoin and stablecoin. And so what the algorithm does is it looks for kind of long-term uptrends and downtrends and tries to capture 80-90% of the upside and just 30-40% of the downside. Long story short, trying to outperform Bitcoin. As of this year, we're outperforming by double digits, and we've seen a ton of traction and interest on that. So that was our kind of flagship product, and as I mentioned, launched Q1 of this year, and then the programmatic yield was actually just something launched recently. So those two are kind of the most exciting products on the platform right now.
That's incredible, man. And I think again, one thing to just kind of overarch it, Alex, in this case is obviously you're providing this suite of different features that hopefully in some way are going to help you either, beat out the broader market or basically be able to beat out just holding Bitcoin or kind of like the basic entry level aspects of crypto. And I think above all, it summarizes that your guys' goal is to really trade like a titan in the space. I know that's kind of the new slogan you guys worked on recently, and I like it personally. It's just showcasing you guys are giving a way to be almost in a democratized way, be able to participate like a traditional hedge fund manager or institutional investor, while at the same time sticking true to the crypto message of being the manager of your own keys. And at the same way, in regards to Digifox, man, we're the same way. We want to make sure that people own their own keys, that it's self-custodial as much as possible. And I think that that's just a great message for you guys in that case in the long run. It positions you well because I think a lot of other crypto wallets out there still aren't focused on like an investor in this case, which is where most people fall in line with in regards to the crypto space. So I just want to say hats off to you, man. I think you guys have had some phenomenal growth. And for people who maybe want to figure out a little bit more about Ember Fund or maybe get their hands on the wallet today and stuff, where would they go, Alex? Like, what would be the best place? Just maybe download it straight from the Apple or Google Play Store?
Yeah, so you can go to our website, which is emberfund.io, or just search Ember Fund in the Apple or Android store, and we should pull up.
Awesome, man. That sounds good. Well, guys, seriously, I'll leave a link down below for you guys to check it out if you want to go directly to the website. I just want to say, Alex, I mean, man, we've known each other since back in 2018.
Yeah.
It's phenomenal to see how you guys have been growing. I wish you nothing but the best of luck. And I just want to say hats off to you and the team for all your success. And for those of you who haven't given it a shot, I've used it myself. I love what Alex has built, and I hope you guys will as well. So thank you, Alex, for taking the time, man. It's a pleasure to have you here.